Hey there folks, Bryce Holdaway here, one of the co-creators of LocationScore, and I'm wondering if you're thinking to yourself, does LocationScore actually work? And I'm glad you asked, because I've got Jeremy Shepherd, who's the Capital Growth King, and Ben Kingsley on standby to walk you through it and show you exactly what it can do. Over to you guys.
Thanks very much, Bryce. Yes, Ben Kingsley here, and also Jeremy Shepherd, the Capital Growth King, here to demonstrate to you whether LocationScore really works. G'day, Jeremy. How are you?
I'm well, thanks, Ben. How are you?
Good, good. All right. So how we demonstrate this is we've got to go back and have a look at the past performance. Now, it's obviously no guarantee of future performance, but it's the best indicator for us to show just how powerful the algorithm is, the LocationScore, the DSR algorithm is, in terms of identifying areas for capital growth. So what we're going to do here is we're going to look at the best performing suburbs, and we've set it up for the top 250, so we're not going to bring it down to the top 10, top 20, top 50, top 100, because you can search as a subscriber inside LocationScore for the top 250. And what I love about that is 16,000 suburbs being fast-tracked down to the top 250, of which you can then start searching to find the location that you want to invest in. So we're going to have a look at some periods of time. We're not going to set up any other parameters. We're going to keep it all nice and broad. We're going to look at houses and units. So we're going to share all in terms of how well it's performed. And let's go back 5 years from now and see exactly how well it's gone. So we're going to go into 2013, into June. So we set that up and we let the algorithm do its work, and it'll come back with those suburbs.
All right, so what we can see here, the top yellow line in that chart is the growth profile of the LocationScore markets. That's the LocationScore top 250. And you see the green curve there is the Australian combined capitals, and the blue curve, which is what we're comparing LocationScore to, is the national average growth rate. And you can see quite clearly there that the LocationScore top 250 is outperforming the combined capitals, which is outperforming the national average, which is outperforming the non-capitals or regional areas.
So if we basically look at that in aggregate, 68% success rate. So over 1 in 2 of those suburbs have performed better based on looking at this demand and supply curve. Now we need to understand that you're not always going to have full demand in an area, are you, Jeremy?
Yeah, that's right. What happens is when demand exceeds supply, prices go up. That increase in price subdues demand and, of course, brings back supply and demand to balance point. So it never lasts forever, but it's these short periods of time, these short windows where you get accelerated growth rates that we're interested in.
So let's quickly have a look. So LocationScore market, so the typical value at the start and the typical value at the end over that period has grown at a compound return of 7.33%, overall 46.88%, which has obviously clearly outperformed all the other markets if we look at it in aggregate. Okay, so that just sets up what we're looking at here. Now, in terms of, let's move forward to what we're seeing here in regards to 2 years from now. We're going to go forward now. So this is 3 years ago, and we're also going to have a look at the June results. So we click on the button and we can see exactly how it's performed in a shorter period of time, where one might argue that we're still in that sort of demand period and there might be some growth left in these particular locations.
Yeah, there you go, boom. That is a massive difference there. And you can see that 90% of the top 250 outperformed the national average growth rate. That means out of those 250, if you were to just randomly pick one of the markets in the LocationScore top 250, you've got a 90% chance over that 3-year period of outperforming the national average growth rate. And if you have a look at some of the figures, the compound annual growth rate is 11%, so it's practically double that of the national average growth rate. And the difference over the 3 years, what is that? That's about a 19% difference. Let's say it was 20%, just to make the numbers easier. And let's say we've got a $500,000 property. Well, 20% of a $500,000 property is $100,000. So you're talking about being better off by $100,000 over 3 years.
Fantastic. So now you're probably thinking, well, that's good on aggregate, but let's actually have a look at the individual markets, because we can't buy the index. What we're buying is the actual suburbs themselves. And you can see here, has it outperformed the national average? Yes, it has. And you can see all of these ticks are marketplaces that have outperformed the national average. So it is quite insightful to be able to then go into these areas and start to look for the ideal properties that you want to buy. But what I also like about this, Jeremy, is that there's no discrimination in terms of price point. So you can see here we've got some suburbs that started off almost at the $1 million mark, and we've got other suburbs where we can see, a 3 in front of it, so 371,000, 341, and if we scroll down a bit further, we can also see some suburbs where there might even be a 2 in front of it. Like here, look at this one here, 224,000. So the best part about this is no matter your price point, this is going to lead you into suburbs that you need to do further research in. So it's not a carte blanche. You don't just go, oh great, I found my suburb. Anything I buy in there is going to give me this type of return. It's not. We've got to be very, very careful in terms of spending our money on the most appropriate asset in that location. But what it is going to do is it's going to save you an enormous amount of time. So LocationScore is going to save you an enormous amount of time to fast track to look into these locations where all the numbers start to stack up. Then you go in and you do your field research. You understand, okay, you talk to the local council to understand what the future supply might look like. If there's going to be rapid development in the area, there may be a case where it will oversupply itself. So you want to avoid those markets into the future, because this algorithm can't see forward future planned properties in the next 3 or 5 or 10 years. So it's really important that you understand that. But an incredible, powerful result if we look at those 3 years. Let's keep going and look at the last 12 months. So does LocationScore really work? Let's start and having a look to see what it's done in the last 12 months in this particular marketplace. We can see we're still searching for 250 suburbs. So we're keeping it as simple as we keep LocationScore. And we can also see here another great result where we've got an 84% success rate in terms of coming into those markets. So, you can clearly see pretty much double or better than double performance against not only the capital cities, but also the national average. And then if we go down into the suburbs, you can start to see, yep, there has been some misses. And like anything, we've never said that this is the perfect tool. Okay, it is a fantastic leading indicator tool that you can use to help fast track your time, but also make money for you. There is money to be made in terms of selecting these outperforming suburbs and buying the right type of property inside those suburbs. Right, Jeremy?
Perfect. Couldn't have said it better myself. And just to point out that this has always only been designed as a shortlisting tool. And like Ben said, it's just to target locations worthy of your interest, of your further research.
So Bryce, there you have it. From our end, we've definitely proven by looking at sample periods of 3, 5 and 1 years, you can almost see that LocationScore has the ability to identify those areas that could outperform in the marketplace. It's up to then the user who can, for under $100, can take access of this fantastic data, this aggregated big data, into a brilliant little algorithm that can identify these locations, and then they can fast track their research and start to talk to the local agents and try and get an understanding of where that opportunity exists. So back to you, Bryce.
80% success rate, folks. I'm sure you'll agree that's a very, very impressive track record. So there's probably 3 things running through your mind at this point. Number 1, do I do absolutely nothing with what I've just heard? Or number 2, do I take that all on board and still try and use my own system to try and do it myself? Or number 3, do you actually use a proven performing method that will give you a competitive advantage when it comes to choosing the next location for your investment property? And I think the third one makes total sense from what you've just seen. So there's 3 options for you. Number 1, you can use the research for a week and get everything you need to help you buy that next or choose that next location. Number 2, you could do it over a month, which gives you just a little bit more time. Or is it number 3, which I think represents the best value, where you got 3 whole months to make sure you get this right, because it's a big decision that you're about to make. So it's important that you're fully informed and you know which is going to have the best chance of giving you the best capital growth moving forward. So all you need to do now is get started today, choose the best plan that suits you, and get started choosing the best locations that suit your portfolio.